and welcome to another episode of the CNBC-TV18 Investor Camp. And this time, the team of Investor Camp has not traveled too far away from home. In fact, we're here in the beautiful city of Pune, and looking at the kind of turnout that we have today, it feels like a raging bull market. But we all know it's not, right? The markets have been under quite a bit of pressure since the start of the year. The Nifty has fallen more than 10-odd%. FIIs have sold more than 20,000 crores. And we have enough and more headwinds to deal with, the next one being the budget, where there are fears of the long-term capital gains tax, etc. But how do you approach all of this turmoil in the market? Today we have an eminent lineup of guests who are going to tell you how to approach the markets fundamentally, technically, and of course a lot of tips for long-term investors as well. So it promises to be an action-packed 1 hour. Without wasting any time, let me first invite the man who gives us a lot of advice on individual stocks, on mid-caps, on large caps, and tells you where to put your money, even in difficult times like this. So let's put our hands together for our first speaker, Mr. SP Tulsian.
Morning, Pune. As Sonia has said that we have been seeing the FII selling for the last, or maybe start of this new year. But sometimes as a fundamental analyst, you always get compelled to think that why we should not choose the quality stocks which we were, or which we have identified earlier, having given good returns but now having corrected, in spite of the fundamentals remaining intact. So without going much into the background, I straightway come, straight on some of the ideas which I've chosen as a value buy in this market. So the theme for the morning is 5 value picks. Let's see them one by one. First is Kesoram Industries. If you see, this is a BK Birla Group company. It's a multi-divisional company having 7.5 million ton cement capacity. They have 2 tire plants, one integrated 3 lakh ton per annum tire plant at Balasore, Odisha. And second is a 44 lakh truck tire plant at Haridwar. The fourth item which is shown on the slide, that plant has been sold to JK Tire for 2,195 crore. Apart from that, they have a small businesses like rayon, maybe like spun pipe and some chemical business. Now, see what has happened. We all know that Mr. BK Birla, now about 95-year-old, is into the succession plan of all his companies, and majority of them are moving to his grandson Kumar Mangalam Birla, that is AV Birla Group, which are, generally commanding a better valuations on the bourses of all the group companies. And even once the migration starts happening of this company as well into that fold, in fact, that is the main theme for recommending this stock as well. So what plans and what moves company has initiated, I have given here. I have in fact given the reasons for choosing this stock, because financial performance probably may put a question mark on my sanity or my wisdom for picking up this stock. But I'm giving you the background which are other than financials for recommending this stock. So company has initiated the move of monetizing their investments and some of the divisions. If I just take first point, as I said, they have a small spun pipe and heavy chemical divisions. Both are in West Bengal, and again, both are contributing practically nothing to the top line, nothing to the bottom line. Maybe top line contribution is about 10 crores, while the bottom line contribution is negative. And company is selling both these divisions, for which the term sheet has already been signed, for 150 crore. And mind it, the net worth of both these companies are closer to about 10 crore, which essentially reflects the book value of the company. So you can understand the capital appreciation which is likely to be made by the company from the divisions which are virtually not contributing anything to the top line and is a drag slightly or maybe marginally to the bottom line, and company will be realizing an amount of rupees 150 crore. So maybe once that deal gets consummated, once they receive the payment, in that quarter the financials will also show an exceptional gain of about 140 crore, which I have said that both the companies have a net worth of 10 crore only. Then apart from that, companies holding investments in the group companies like Century Textile, Century Enka, Mangalam Cement, Jayashree Tea, and board of the company has taken an in-principle decision to divest all these stake. And the value of the stake is estimated at about 470 crore. at that point of time, about a couple of months back when the bank board resolved to monetize those investments. So that will also get liquidated. Third, as I said earlier, company has agreed to sell the JK Tire, the Haridwar tire plant to JK Tire for 2,195 crore. For that, they are waiting for the regulatory approval, and once that comes in, the entire amount of 2,195 crore is going to get received by the company. This is one, monetization of the assets, and second is the fresh issue of capital. This fresh issue of capital is again made with a view to increase the promoter stake as well as also to infuse fresh equity from the strategic or from the QIP institutional investors as well. So company has already taken a step in that direction. About a week back, they've issued shares to the promoters of 90 crore rupees. Here, the company has not given the price at which per share these shares were issued, but this will eventually raise the promoter stake from 46% to maybe 50% plus. About 4 to 4.5% increase in the stake will happen because of this issue of preferential equity shares of 90 crore by the company. And second, what company has done, they've issued a preferential optionally convertible preference shares of an equivalent amount of 90 crore to IndusInd Bank. Now again, here I am unable to understand why IndusInd Bank will subscribe to the equity or maybe the preference shares which has an option to convert into equity. So what I read that if you take the case and mind it, the first one 90 crore equity has been subscribed by the AB Birla Group company, that is Manav Investment and Trading. That's the group company which is the investment arm of AB Birla Group having subscribed to this company. If you recall, in Century Textile also the promoters have increased 5% stake in 2 stages. Now here we all know that financial year FY16 is coming to an end on 31st March. So they have exercised this 5% stake increase in FY16. And what I presume that probably this optionally convertible preference shares may get bought by the promoters in the FY17 from IndusInd Bank by giving them some interest element and all that. So that can further make the promoters increase go up by about 5%. And apart from that, company has a resolution of raising additional 470 crore. In fact, there was a, in principle, resolution to raise 650 crore. Since 180 crores have already been raised, 470 crores are being contemplated by the company to be raised by maybe GDR, ADR, or maybe QIP. But I presume that maybe those can come in the form of QIP. I rule out the possibility of any ADR, GDR issues coming in. So these are the fresh equity infusion which will increase the net worth of the company, vis-a-vis reduce the debt. Now come on the valuations of the company. What will be left with the company after this spun pipe chemical division and one of the tire division plant sale? They will be left with a 7.5 million ton per annum cement capacity. Even if I value that at $100 per annum, $100 per ton, mind it, the deal which has happened with the Reliance Infra and Birla Corp, the deal has happened at $140. One may argue that those were the new plants, that is why they got a deal of $140. But even all these plants, the company is having 4 plants in the MP region where they are all, they keep modernizing the plants, keep it updated and all that. But even a conservative valuation of $100 per ton gives a valuation of about 5,000 crore for this company alone for the cement plant. Come on the tire plant, which is remained with the company, which is making the passenger vehicle and two-wheeler cars and all that. That division, that tire plant is valued at around 1,500 crore, having a book value of closer to about 1,300 crore. And the informed sources say that if they eventually decide to sell this plant also, that can fetch them about 1,500 crore. Third is the rayon plant having a capacity of 6,500 ton per annum. That is estimated to have a net present value of about 250 crore. So add all this 5,000, 1,500 and 250. This gives you a valuation of closer to about 7,000 crore. And as I said, that company is moving into the AB Birla fold. Present stake is getting increased from 46 to 50%. Now come off this 50% stake, if you see a majority of that, about 45% stake is held by all AB Birla Group company, which have clearly earmarked that ultimately or eventually they are going into the AB Birla fold. So Pilani Investments holds 25%, Century holds 5%, and 2 investment company, that is Manav Investment and Aditya Marketing. Both these companies are investment arm of AB Birla Group. Both these companies are holding 15%. So 25, 5, 30 and 15, 45% is held by clearly by AB Birla Group. So it leaves no confusion at all that this company will not go to AB Birla Group, because earlier there was speculation in the market that probably this company may go to the daughter of BK Birla, that is Mrs. Manjushri Mohta, but that may not happen looking to the present steps having initiated by the company. So this further, as I am expecting that stake may get raised to about 15% by 5% in FY17, that can take this stake to 55%. And an interesting part, I am unable to understand, Century Enka is holding closer to 1.28%. And that stake is shown for the long time, for the ages, as a non-promoter category, as a non-promoter shareholder. So suppose tomorrow if Century Enka also raises their stake, that will not get counted in the promoter stake, and that will not trigger the open offer. Because if the promoters are increasing more than 5% stake in one financial year, then the open offer gets triggered. So I don't know whether they will be using this route also to infuse further money and increase the promoter stake. So that will be the additional extra sweetener. So if you go by all these things, the present EV gives a valuation of about $60 per metric ton for the cement business, which seems very low, because if you see the larger group companies on the stock market also, they are ruling at a valuation of maybe about $120, $130. I'm referring the companies like Ultratech, ACC, and all sort of things. So taking all this into consideration, I'm expecting share to move closer to about 120 in next 6 months. And as a disclosure, even I have my investments and advice to my clients also have been given on the similar line. Come on the second stock. This is again an auto ancillary. First one was the cement or maybe a group theme, which was recommended, picked up on that basis. This is Forging. They are making all type of forging. If you see, all type and all sizes. They are into making of carbon alloys, micro alloys, and stainless steel of all type of castings, having 4 plants in Tamil Nadu with a capacity of 45,000 ton per annum. And now that capacity is getting increased to 65,000 ton per annum, because all the 4 plants on an aggregate basis are operating at a 85% capacity utilization, which is in fact the practically achievable capacity, because you can't go beyond 90%. And company exports more than 70% of its production to US and Europe, to the automobile majors, and they are making castings from 200 grams to 60 kilo of weight. And 80% of their production goes to the automobile sector for commercial vehicle and passenger vehicle, with 10% of each used for valve and oil fields and off-highway segment. So they are practically catering to the quality buyers across the globe and largely to the automobile sector. If you come on the financials of the company, FY16 first 9 months, they had an income of 378 crore, EBITDA at 87 crore, very respectable EBITDA margin of 23% plus. PAT is at 40 crores and EPS is at 32 rupees. If you break the EPS of 32 rupees, this is actually equally divided in all 3 quarters. My point is that they have been consistently making a slight increase in their bottom line as well as operating profit margin, maybe by about 10% on year-on-year basis. So first quarter may have an EPS of 10 rupees, second quarter may have an EPS of 11 rupees, and third quarter may have an EPS of 11.50. So in this way, this 9 months EPS is at 32 rupees 40 paise. So that is giving an estimated EPS of about 43 rupees for FY16. If you see, equity is very low at about 12 crores, having face value of 10 rupees. Promoter stake is at 57%. Institutional holding, again with a respectable institutions, which are holding this 17% stake. Net worth is very low. Net worth is quite respectable at 275 crore, with debt just at 100 crores on a net of cash basis. That means they have a debt of about 180 crore, while cash and cash bank balances are about 80 crores. So share now ruling at 425 can move to a level of about 535 in next 6 months, giving a return of close to about 25%, with very limited downside seen from here. Again, as a disclosure, I have no personal interest, but that this call has been recommended to my clients as well. Now, sugar sector, I'm quite bullish, because if you see the hardening of the sugar prices in this last maybe 2 or 3 months, and this is resulting more beneficial for the UP-based sugar mill, largely for the reason that sugar mills are based in UP are always realizing higher realization of about 1 rupee 50 paise to 2 rupees per kg. On the other hand, the raw material, that is sugarcane prices, are fixed at 280 per quintal by the UP state government as SAP, which is again seen quite attractive. by the market or maybe by the industry when you compare it with Karnataka prices or maybe with Tamil Nadu prices. So this sugar mill is one of the largest player. Maybe you can call it the third largest after Balrampur Chini and Bajaj Hindustan, having 7 plants in UP. And the best part is that they have presence in all 3 regions of UP, that is West, Central and Eastern. West is predominantly the highest producing sugar, but in Eastern UP, Eastern part of UP, you have a better realization of sugar. Apart from the sugar, the company also has gears business and water treatment business. And both these segments are doing quite well. If I just give you the financials of these 2 divisions, FY15, gear business had an income of 103 crore and EBIT of 29 crore. So you can understand the EBIT margin of closer to 30%. And water treatment has newly started segment where the water and wastewater managements are carried out by the company, had an income of 200 crore but negative EBIT of 4 crore. Because as I said, that company has been new entrant in the water management. But if you have a top line of 200 crore, I think bottom line can come at any level because initially the expertise and the setting up and R&D cost and maybe the infrastructure cost remains quite high. And once the top line gets accelerated, even that can start, contributing to the bottom line of the company as well. And now what is happening, the sugar mills are all hiving off to a new company, and this existing company will carry on with a business of gear and water treatment. So what will happen, the existing shareholder, those who are holding shares in Triveni Engineering, will be having the equal number of shares in both the businesses. That means there will be 2 companies eventually listed. One will be Triveni Sugar or Triveni Industries, and second will be this Triveni Engineering. So shareholder who will be buying share now will be having equal number of shares in the existing company as well as equal number of company to be coming into existence post demerger of all sugar units. Current sugar season is seeing a recovery of 10.33% against 9.3%. Now see, this is very important. In case of a sugar mill, if you have a recovery, higher recovery of 1%, you can say that virtually that entire 1% is getting added to the bottom line. Now, if it has increased from 9.36 to 10.33, that means there is almost an increase in recovery of about 10%. So ballpark, you can say that the income of the company of 10% of that straightway gets added to the profit before tax. Company also is carrying an inventory of 1.5 lakh ton of sugar as at 31st March. Because sugar season only lasts for about 5 to 6 months in UP. It has started in mid-November, expire, or maybe mills will start closing from end of March. So companies carry a lot of inventory during this period. And the inventory which was valued at 29.50 rupees per kg, now the sugar prices are ruling at 31.50 to 32 rupees per kg. So you can imagine the increase benefit to be availed by the company on liquidation of this inventory, coupled with the production already on in the current season. Distillery division is doing quite well because of the blending move initiated by the government and the higher realization seen of 41 rupees per litre against 39 rupees per litre having realized in the previous year. Q3, if you see the Q3 income, because why I'm only taking Q3, because Q3 is the results which indicates or which reflects the working of the company, because Q2 mill was closed, Q1 mill was closed. So the Q1 and Q2 workings are not relevant, but it is essential to understand the working of Q3. If you see, company had an income of 512 crore against 582 crores in the same period of the previous year. And operating profit, now see, this is very interesting. Operating profit in the Q3 was at 26 crore against loss of 34 crore. That means you see a shift of 60 crore having taken place from loss to profit. Similarly, profit before tax has been at 8.5 crore against loss of 57 crore. So again, similar way, 65 crore shift has happened. And this has largely happened only with the sugar. If you see, sugar EBIT has seen a realization of 2.5 crore loss against 59 crore loss in the similar quarter previous year. That means if you take a net effect of that, there is a reduction of about 57 crore in the sugar division losses, which has largely contributed to the operating profit and profit before tax. Distillery also, as I said, has performed very well because of the higher realization of the ethanol, and that has contributed a bit of 16.5 crore against 6.5 crore in the same quarter last year. Cogen has remained constant at the same level of 18 crore. The SAP of 280 per quintal fixed by the UP government, which I have already discussed. And here the best part is subsidy of 8 rupees 60 paisa only has been booked. If you make a comparison with the Q3 numbers of Bajaj Hindustan, they have taken a subsidy of 23 crores, 23 rupees per kg, which has to eventually get reversed in Q4 and in Q4 or maybe in the Q1 of the next year, which is not likely to happen here. So that means they have taken a realistic subsidy calculation of 860 per kg. That is also very positive. And as I say that this restructuring move will happen in maybe next 6 months, where the two company shares will be available to the shareholder, those who will be buying share now. So eventually, if you take the value of both the shares together, I'm expecting a target of about 50 rupees in next 6 months. Again, as a disclosure, I have interest, and the similar investment call has been given to our clients. Next stock is Lumax Industries. This is again an auto ancillary stock, and they provide complete auto lighting systems and solutions to four-wheelers, two-wheelers, buses, trucks, tractors, and earth mover. And this company is into financial and technical collaborations with Stanley Electric of Japan. If you see promoter stake of 74%, of which 37.5% is held by Stanley Electric of Japan, and 36.5% is held by the Indian promoter. That's how 74% is held by the promoters put together. 9 months income of the company was at 936 crore against FY15 top line of 1150 crore. Operating profit for first 9 months was at 39 crore against 23 crores of the whole of FY15. So if I just take a ballpark expectation of about 50 crore operating profit for FY16, you can see operating profit getting doubled in this from FY15 to FY16. Similarly, PAT of 27 crore in 9 months against 17 crore for whole of FY15. So if you take, as I explained, that 27 crore again has come linear in all 3 quarters. You can say 9 crore in each quarter has been posted by the company. So comfortably take as 30 crores as the 36 crore as the PAT for the company against 17 crore in the financial year FY15. Again, almost 100% jump, and that is getting translated into EPS also in the form of 29 rupees for first 9 months against 18 rupees for whole of FY15. So again, you can expect a comfortable EPS of about rupees 36, 37, which is 100% more than the EPS posted by the company for FY15. Again, a very small equity of less than 10 crore with a face value of 10. Net worth is about 190 crore. Debt is about 80 crores. And they have 9 manufacturing plants across India. That means in the northern, central, southern, to cater to all the automakers, with 60% Indian market share in auto industry. So I'm expecting a price of about 490 in next 6 months. No personal holding, but the investment call has been given to our clients. The last stock is Amara Raja Battery. In fact, this is also seen to be quite a robust, in fact, you can call it as a auto ancillary stocks because they are the makers of the largest makers of lead acid storage batteries, which are used in the automobile industries as well as having the industrial uses also. And the consistency in their financial performance, if you plot the quarterly performance of the company for last 12 years, for last 12 quarters, you will find them quite consistent and quite, increasing every quarter. They have capacity of 8.25 million batteries for four-wheeler, 8.40 million batteries for two-wheelers, and 0.9 million units for industrial batteries. Having 2 plants, both in AP, Andhra Pradesh, one at Tirupati and second at Chittoor. Come on the financial performance of the company for first 9 months. Income of 3,555 crore against 4,250 crore for FY15. See the jump in the operating profit, 560 crore in 9 months against 610 crore for FY15. PAT of 380 crore against 410 crore of FY15. That means almost company has achieved the bottom line of entire FY15 in first 9 months, and that has translated into the EPS of 22 rupees 30 paise for first 9 months against 24 rupees for FY15. So one can expect an EPS of closer to about 29 to 30 for this company. Again, equity very small, 17 crore with a face value of 1 rupee. Net worth is 2,080 crores. It's a debt-free company. Promoter stake is 52%, equally held by the Indian and overseas promoter, that is Johnson Control of US holds 26%, and the Indian promoters hold 26%. Institutional investors are holding about 30%, and it's a, as I said, it's a debt-free company. I'm expecting a target of about 1100 rupees in next 6 months, having personal interest investments as well as the advice has been given to our clients also. So these are the 5 value picks, and I think that if you choose this stock in this bearish, when we have been screaming of the market falling and all that, I think all these 5 stocks seems to be ruling at its bottom or maybe at its fundamental low valuations and with a very limited downside risk seen from here, and can give you a return of about 25%. With this, I end my presentation. Thank you.